Hi, this is Ron Janish, and this video is going to give you some insights as to what we've accomplished in the last year and what's up for the future. So, some of us have been involved in a project where every once in a while we'll post one of these little charts here. And what's kind of neat is you can simply look at it and get our take on the market. For example, when there's a number on the high side, that means I think it's going to go down, and when there's a number on the low side, well, I think it's going to go up. So here was an interesting one recently that happened this week. At the beginning of this week, we had this one here, a 3 and a 5, which would give it a lot of downside push, and sure enough, market went and pushed its way down. Now that's just one of the things we've been updating on a regular basis, and this year also we put together an article which is in the it's in Stocks and Commodities magazine. It was published in the January issue, which came out in December. And what it basically shows you is some information on something called the green line. And the green line is a line you can draw. And here's an example of the green line. And there's a few tricks to how to draw it. It's not just a line that's green. And what this is very helpful is figuring out when to sell. After all, if somebody's been long a long time and they need a time of when to sell, this could be extremely helpful. And we wrote up that article, and it shows you how it found the top in Apple and the Dow and a whole bunch of things. And here's a chart where it suggests there's a nice little top here on this weekly chart in the Qs, which are also known as the Nasdaq. Okay. So what we've done this year is publish that article, and then we've also been building some software. In the wonderful world of software, one of the areas we really dug into is the Forex pairs. And the reason we dug into Forex is because the benefit of Forex is you get an incredible variety of patterns, because after all, we are into patterns, and you have this wonderful continuous data. Whereas in futures contracts, there's something that people scotch tape together that they call continuous contracts, but they're really not. Let's face it. So this is a nice example of a test run we just did on a system we built. This is not our best system by any means. Probably the one that really stands out in my mind is what I call one of my October systems. This one is a September 2nd system, which means that the last time we worked on it was pretty much September 2nd. And we're now in December, so you can see that we've been working with effectively virgin data. And this particular system tested out at exposure of 62%. What that means is that 62% of the time the money's actually at work. Showed an annual return of 20.71%. And let's see, and the other important thing is what's the worst case down draw? Worst case system down draw was 1.86%. Now, this particular test run here used zilch in terms of leverage, no leverage. And at times it was just sitting there in cash. Now let's see another system that we really like, and this is for the S&P and the Qs. And what this one does is this is a June 16th system, which means it's been sitting there just aging since June 16th. And that's because back in May and April, Felipe was doing a few things with it down in Sao Paulo. And I downloaded it on my machine, and these are the kind of numbers it's generated. And this is a run that is, once again, no leverage. And with a no leverage run, it only did an annual return of 26%, and this is since June 16th. Since we had 6 months of data, we felt it'd be useful. Now let's see what it did in terms of down draw, which is an important number. And worst case down draw was 3.49%. And what we like about the S&P and the Qs is that it's a continuous thing. We can trade futures with this, but we effectively have a continuous contract that has some actual reliable data. So that's kind of neat. And even since June, you can see that our test run shows that 66% of the trades were profitable. So we're looking at that. Let's see what would happen if we only did the S&P since June. Let's test that out. This will just take a second. Boom. There it is. Let's see what the percentage would be. It'd probably be smaller. Well, maybe not. There we go. Yeah, it would be smaller. 16%. Okay, but if we do that, then we have to change something because otherwise we're only using 50% of cash available. So we have to move something around here. Let's say if we do this, 20% leverage of 5 equals 100%. So this is the same as trading with 100% each time. Let's do the run and we will see it. So we've been developing these things, and let's see how it's done. 33.92. Had you buy and held strategy since then in the S&P, you would have been down 7.9%, would have been your annualized return, negative 7.9% annualized return, and down draw would have been 11.99. In this case here, down draw would have been 6.34. So that's what our systems show. And to give you an idea as to what we're doing in the future is we utilize the technology that we have learned from and developed in order to build even better things. None of these pieces of software are for sale. Please hold your wallets back. We don't want to sell these. What we did was we developed these systems and these things on here in order to prepare us for the next stage. So what the heck is the next stage? Well, there's really two parts to the next stage, and just to really pop them together quickly, let me quickly show you. Boom. Yeah, here's an example. This is an actual account. Okay, and this is an account we use for our demonstration purposes, but it's real money. Real money is a real money account, and as of today, and notice it says sell here, but it says 0, 0 here and 0, 0 here. That just means, and the same with here, that just means that we have no positions open in these, and we have sells. So in other words, if the market opens up way up high, where our number is, where our orders are, we would wind up going short. Whereas these other ones, we have actual short or long positions. Actually, they're all short. Yeah. See all these -2, -1, minus. Okay. That's our demonstration account. My actual account, yes, I really do trade, is this one here, and this is my personal account. Oop, let's knock this out. And you can see how many I went long or short or whatever, and at what price, and it tells you over here what it is. Okay. So for example, on Friday, I went short this one here, the Feb Hogs, at this price here. That's the average because I may not have been filled all at the same time at these things. There's 3 contracts in there. Now, I don't manage money for the public. Not available. Sorry, folks. If you're interested in money managers and people who know Andrew's technology, please contact somebody who's used it for a while, and generally people who've taken our expanded course like Matt and Felipe. They have access to what I call the inner circle of trades and what goes on, and they should be able to show you a very nice track record of their own. Okay, so if you're interested in that, please contact them, not me. And now what I'm doing is, with this technology that I just showed you here, or the results, with this technology that we're using to drive this kind of trading, what we're going to do is develop more and more signals and more software that will do this all automatically without a human being being involved. So that's the plan for the future. And personally, I'll continue teaching the Andrews course because it's a lot of fun for me, and the expanded Andrews course. So I teach the advanced and the expanded. And you can get through to me at andrewscourse.com. And otherwise, thanks for watching. See you next time.